Hello from Chicago, Alan Knuckman here above the trading floor at the CME Group, talking energy with the focus on crude. October crude, 47.50 down 115 today, a 2.5% drop. So essentially giving back the gain from Friday. Let's talk about what happened here. Number one, October is now the front month. September is over, so that contract is done. We had losses today on large volume, so we traded about 800,000 contracts today and a big dive. So again, it's given back the gains as we finished up. Now everybody is focused on this October contract. It was also essentially a straight down session. So the markets are nervous after the rally we've seen. So maybe you're seeing some profit taking. Oil itself had a bounce on Friday, but was down about 30 cents on the week. So that bounce was a recovery to get to near positive. So it's about 5% off the lows that we saw on Thursday morning. So it did have a significant snap back on Thursday and Friday, obviously. So again, I talked about the nervousness of the marketplace. We've been stuck in this range for a while, and as we get to the upper end of the range, people are more apt to take profits. Today, the news was a joint OPEC, non-OPEC technical committee meeting in Vienna. Now, last time this happened 2 weeks ago, I guess this is a follow-up to that first meeting. 2 weeks ago, that the OPEC group cited some laggards in their compliance, and that gave the market a little bit of a shake-up there. So who knows what's going to come out of this, but that's part of what the focus in. Mainly, it's a lack of fundamentals. It continues to be the battle royale. So you're seeing the OPEC tough talk of production cuts and trying to keep those guys reined in versus the U.S. shale production output increases. Now, that's just been the battle, and those are the dynamics at work each and every day. Until something changes significantly, we're not going to see much price move, and that's where we're at now. 2 out of the last 3 weeks, we've seen the oil rig count fall, actually, after almost every day this year, an increase. So that's something that can put an undercurrent of support in the markets, that they're not ramping up that quickly. And to look at it in the bigger picture, we've also seen oil inventories fall from their peak anyways back in March, so they're 13% off their peak. We'll be awaiting some new numbers that come out this week to give the market some fuel for a bit. But really what it comes down to is just price. Price action remains between 47 support, which is the midpoint of that May drop, and $50 psychologically up above. We haven't closed above 50, and I mention this all the time, since the end of July. So now we're going on 3 weeks in August without a close above 50. So focus on the price. Today we finished down 115 at 47.50, just above that 47 floor, down 2.5%.